Okay, welcome everybody. As always, I'm your host, Dane van der Mast, on this beautiful Monday morning, the 26th of September. Guys, I'm super excited to be back with you guys again live in a special Dollars for Lunch session. Now, we're going to be going through a ton of items, and really what we're doing this week is we're taking all of the feedback that we've received over the past couple of weeks, and we're looking at how do we make the shows better. And one of the feedback items is how do we combine and give you as much information in as condensed and informative way as humanly possible. So we will be moving towards a 2-show per day schedule where we will be doing shows live, right? The feedback has been that most of you prefer the live sessions. And so we're going to be making sure that the shows are more frequent and on a live basis. Now, we're going to be having a ton of fun. There's a lot of new things that we're bringing in to change things up and take things to the next level. So we're going to be moving into the news. We're going to be talking about what's happening in the markets, and then we're going to jump into live trading as always for the New York Stock Exchange Open. So please let me know in the comments where in the world you are joining us. I can see Aslam, welcome, Simos, Mackenzie, Darius, let's go, Keegan, first one to comment as always. We know we can always count on you. We also have Mel's, Benedict, Renisha. What is happening, guys? We're about to have a ton of fun. As always, I miss and crave being live with you guys. It is a Monday. We are looking at what's happening in the world. And guys, there's some crazy things currently happening in the world and in the markets as we speak. So we're obviously going to be diving into that. We're going to be unpacking and looking at what opportunities lay ahead of us. Now, this is a bit of a special edition broadcast. So we're going to go over that 15-minute time frame, and that's mostly due to the fact that we're going to dive into what is happening. We're seeing unprecedented things happening across the world. For those of you who've heard about MetaTrader, for those of you who are hearing about Russia, for those of you hearing about SAA running out of jet fuel, we're about to jump into it, and there's never been a better time to be a trader. Now, I want to talk about this for a second because it is super important, right? Being a trader and being in a position to understand, to analyze the markets means you're getting ready for the recession, making yourself, your portfolio, and your finances recession proof. Now, what does recession proof mean? Does it mean there can be pain, there can be suffering? Of course, when we see recessions, it's global, it's widespread. But how do you put yourself in a position to prepare, and how do you see the recession as an opportunity? We're going to be speaking about this in a lot more detail over the next coming week. But what you need to understand is that when recessions happen, when we see markets in this kind of turmoil, wealthier people get wealthier, right? Smart money makes money during a recession, right? So there's never been a better time to be a trader, see, understand, and look at what is busy happening in the world, and then obviously capitalize with that preparation meets opportunity in the market. So just a massive shout out to everybody that is joining us. Peter van Wyk, Bonsile, Lot Boomer, Ruban, Lucky, and Sai Moss. Welcome. Beautiful. All the way from Soweto. Let's see Port Elizabeth market open. Let's get some money. Loving the lives. What is happening? Leroy, why is your things Simos John? Okay, but I know you, so that's the important part. All right, so let's jump in, and we are looking at local news first. We're going to start off with what's happening. We are going to move the live trading into the start of the New York Stock Exchange, which is going to come up in the next 23 minutes. It gives us a little bit of opportunity and time to cover what is happening in the world, in the markets as we speak. So first and foremost, Cape Town Airport has less than a week of jet fuel left. And again, when we speak about being in a position of being a trader and understanding what's happening in the world, it gives us an opportunity to not only just survive through tough times, but to thrive. For those of you who've been, watching and following over the past bit, I explained to you that when the Rand was at 14 Rand to the dollar, I said the Rand would hit 18, 19, potentially 20 Rand to the dollar before the end of the year. And people were like, it's impossible, it cannot happen, right? When the Rand was sitting at 10 Rand to the dollar, I said that it could potentially hit closer to the 18 Rand to the dollar mark in a couple years. And people said it couldn't happen. Have a look at what is happening right now. The South African Rand is currently sitting over 18 Rand to a dollar. I was having a discussion with a client the other day who reminded me of, a a little while back, less than 20 years ago, traveling to Disneyland where the rand was 1-to-1, where one South African rand was worth $1. We're now sitting at 18 rand to the dollar. Now again, for those of you who understand how to trade, this means that there has been opportunity this whole time, right? It's about seeing that opportunity, preparing for it, and then when that opportunity comes, it's about preparation to opportunity for success. So on the local front, I definitely think we're going to look into the ZAR in a second, but it is not looking good for the South African rand. If you're sitting in dollars, euro, pound, anything else in the rand, you should be smiling right now, specifically if you have any dollars. If you have a dollar trading account, and this is the beauty of FX trading, if you have a dollar trading account, just by having that account and the South African rand losing value, you're making money on your account. As an example, if you had a dollar account, you created $1,000 account, you placed one of trades, and let's say it's still at $1,000, right? If the rand moved from 16 to 18 rand to the dollar, you've made ROI on your own money just by having a diversification, just by having holdings in another currency. So it's just about a mindset and an opportunity change. So let's just make sure everybody's on the same page. Ntami, let's go. Money time, enter his worship. What is happening, Kwai-san? Mr. S. Victoria, beautiful bake. What is happening, Volatile? How are you doing? All right. Now, guys, the markets are a mess at the moment, right? You can see it in the dates, you can see it across the board. And the last interest rate announcement has absolutely wrecked markets, right? Wall Street, for the first time that I can see in history in the last 20, 30 years, is reacting to these interest rates in a way that we've never seen before. As I've taken you guys through in previous analysis, over the past couple recessions, over the past couple economic downturns, Wall Street has basically thrived through raising interest rates, right? I've shown you guys the charts, I've been through the data. For the first time in what I can see, looking to be close to 40 years, Wall Street is taking a massive hit and is honestly looking like it is showing fear for what the Federal Reserve is currently doing. Now, what does this mean, and why would Wall Street be fearful? Now, when interest rates are increased, right, when these economic policies are introduced to curb inflation, to curb rampant inflation, which ultimately moves an economy to the point where the dollar is worth less and less, all right? And you get a repeat of what we saw in Zimbabwe in terms of superinflation. These economic policies that are introduced create stress and strain on the economy, right? Wall Street is under the impression that the steps that are being taken are going far beyond what is necessary, A, and B, could force the US economy into a recession. In Powell's discussions, as we saw last week, he basically hinted the fact that recession is coming. We just don't know how hard it's going to hit and how bad it's going to be. So what you need to understand and prepare for, 2007, 2008, we had the housing crisis, we had the housing crash. For everybody that was involved in normal business, everyday business, brick and mortar stores, construction, housing, whatever sector of business you're in most cases, people took a knock and were fearful across the board, right? And in that particular case, I watched as an observer and I saw this happening around me, and there's nothing I could do. I was sitting in the passenger seat, and I've spoken about this a few times. This time round, we're about to see something I don't think we've ever seen in history before. Those of you who know the famous investor, the gentleman who called out the housing bubble, Michael Burry, he's been speaking about this often, saying what we're about to see coming up will make the 2007, make the 2008 housing crisis look like a blip on the map, look like it was absolutely nothing, right? And it's not something to be scared by. Michael Burry, when he capitalized on the 2007-2008 housing crisis, right, he made billions of dollars, right, off of that move. Why? Because instead of seeing a negative, he saw an opportunity. He was prepared with the education, the systems, the tools to understand the market, right? He was prepared and equipped. And when the opportunity arose, he capitalized on it. And that is going to be the theme that we're going to see happening over the next couple of months. So if there's been a time that you've been involved in trading, or you've been watching the markets and you've been kind of 50-50ing it, Now is the time to really start getting serious. Now is the time to start spending time in the charts, understanding what's happening. Join the live broadcast, ask questions, because things are going to go to a whole new level. And as with these recessions and moves, we see whole industries shifting and changing in real time. Now, if that's not enough, right? If the Federal Reserve interest rate and the Wall Street moves are not worrying enough, we also have something else to consider that we need to pay quite a bit of attention to, right? And that is still going to be the Russia-Ukraine issue, right? We've seen in recent days, Russia has basically said that they have no fear of using nuclear warfare or nuclear, attack methods. And this is the last thing anybody wants to hear, right? We heard from Elon Musk in part of the Twitter trial that he spoke to his banker, and part and parcel of him pulling out of Twitter over and above the fact that Twitter was essentially claiming numbers that they couldn't support in terms of bots, was the fact that he said, would this be the right time to acquire a company of this nature and size, considering we could be around the corner from World War III? And again, I don't say those words very lightly. That is the last thing anybody wants to see or hear, but we need to think about these things. We need to obviously prepare ourselves accordingly. So we're seeing times we've never seen before, right? We're seeing opportunities that we've never seen before. And again, it's not to be fearful. It's about looking for those opportunities and where they can be found. Again, that's the beauty of being a trader. People ask me and say, well, Dane, you love trading all these other things, but if markets are falling and there's chaos everywhere, how do you make money? The reality is that's the beauty of contracts for difference, right? You can short a market. The market's falling, we ride that fall. The market's rising, we buy that market. So again, there is so many reasons why you want to start getting serious in the season and take your trading to another level. If you've needed reasons, if you've needed incentive, and if you needed a push, well, listen, the push is here because things are about to get serious and things are about to change. Now, moving back into the formalities, right? Pound sterling has recovered against some of the lows on the euro as well as the dollar. However, we're going to look at the charts in a second, and it is looking crazy, right? We're seeing volatility unmatched in the markets that I pretty much haven't seen in recent history. We're seeing some absolutely crazy things. Just having a look at the S&P 500 heat map, we can see it is a bloodbath across the board, and doesn't matter where it is that you look, right? All in the red. Amazon taking a 3% hit, Tesla almost negative 4.5. So it's not looking good. And we obviously want to understand where we can capitalize on that. Moving into the economic calendar for this week and what items we can especially pay attention to is we have ECB President Lagarde speaking this evening at 7 p.m. Let me just check my dates. Sorry, that's an apology from my side. My calendar decided to move. If you're on a Monday and you say next week, the system believes you're still on Sunday US time, and will basically show you the previous week. I've done it once before where I planned my whole week based on past week's data, and I only got halfway through where I realized something isn't right. How can we receive duplicate data information? So Lagarde, again, I do remember there was a meeting for today. Anytime we're seeing any sort of central bank, reserve bank discussion, speak, meeting, in the past, this was never a big thing, right? In these particular times, any discussion, right, however big, however small, has an ability to move markets. And I want you to think about it like this. Markets are spooked, right? For any of you who've been looking at nature reserves, or you've been out in the wildlife, out in the bush, when animals are roaming and there's no disturbance, there's no issues, right? They're eating, they're doing their own thing, there's no problems. When there's drama, when there's an issue, when there's, volatility, right? When there's issues, everybody's on alert, and the slightest move or change in sentiment can have massive ripple effects. And I believe that's the season that we're currently in. So we want to just start to pay attention, not necessarily watching or listening to all of these speeches, because again, you're going to get analysis paralysis where you're just overloaded with information. But it's going to be important to just take away some of the highlights, and you can just find that obviously watching what is busy happening in the world, right? This is currently happening as we speak, and we will see the minutes or the summary of that hopefully towards the end. Looking at items for tomorrow, tomorrow's US session gives us some good data for durable goods orders for month-on-month May, and then we get new home sales for August, consumer confidence as well. So tomorrow afternoon, we should see a bit more items moving on the dollar. Wednesday is going to specifically be, again, moving around Powell and his discussions at 4:15 GMT +2, right? Again, Powell at this point in time is pretty much leading the market with a bullwhip, right? So it is really going to be about what is his sentiment? Is there a shift? Is there a change, right? From what he was discussing and where we were sitting last week with the last interest rate. So that's definitely something we want to pay attention to. Crude oil inventories will definitely give us an indication whether inventories are catching up or whether there's an oversupply, as well as usage. GDP for Thursday is going to be important on the dollar. This is going to be a big one. Remember, the last GDP report and data that we got for the dollar, right, showed that the dollar just went into a technical recession. Technical recession meaning 2 quarters of negative GDP growth is by definition for most reserve banks and most governments around the world, that is the definition of a recession, right? After the second negative GDP growth for the dollar, the US White House, I laugh about this because they redefined what a recession is, right? They said, they redefined what data constitutes towards being in a recession. Said, well, you can't just look at gross domestic product. There's a few other things that need to be added onto that, right? That you have to consider in terms of the labor market. So this is going to be interesting. The previous data came out at a negative 0.6%. So meaning the gross domestic product for the US shrank by 0.6%. It's going to be interesting, right? If we see another negative, I honestly don't know how the White House would defend that or how Powell or the Fed would initially deal with this, right? Initial jobless claims, we will also get that data in on Thursday. And then Friday, we're going to see some GDP data for the pound, some unemployment rate changes for the euro, as well as some CPI and core PCE pricing on the dollar. So we have a few items this week. We don't have a ton of fundamental data, but we at least have a few items that we can really focus on and sink our teeth into. But guys, I think we're in for times that we have never seen before. I'm looking through the data and I can't find another time in history where we've seen moves like this, right? And it's massive. It's huge. It's big. Before, I was not considering shorting indices, right? Before, I was not considering buying the dollar. Before, I was not considering selling gold in any way, shape, or form. Price action is king, and price action is saying, guys, there's something big busy coming up. So before we get into that, New York Stock Exchange is going to open up in 9 minutes. I want to cover and just see if there are some opportunities for us this afternoon live. And then we're going to move directly after that into New York Stock Exchange open as well as trading. So as always, we're going to start off this session with having a look at what the dollar index is currently doing and what we need to do around that to essentially deal with that dollar index. So as we discussed last week and where we were sitting last week, ultimately we're essentially pushing up against this resistance level on the dollar. I was not of the opinion that the dollar could gain strength. Again, all past data, all past interest rate announcements, as well as all past recessions have shown us the contrary to what we're currently seeing. So this dollar moved to the top side. I don't know what to make of it. We obviously have to remove now sentiment. We have to remove feelings and what we think may happen. We now have to deal with what is on the table and the data in front of us. Now, yes, today we have a ton of volatility on the dollar. We're seeing that rejection off that top, and we might start to see some sort of pullback on the dollar. But for the day, in basically since Friday, we've been in this massive movement. Today, has pretty much, we're net equal, but again, a ton of volatility on the dollar looking at the day. Now moving on to Euro USD, because again, this is probably one of the best indications of the current imbalance in the market, is that €1 is essentially trading currently as we're speaking at this point in time and recording live at 96 cents US, right? Again, we have not been at these levels, right, for I think it's probably about 20 years. There we go, right? So not only did we beat the 2003 level, but which is kind of behind my head at this point in time. Let me remove my head really quickly, right? So not only did we beat that 2003 level, but we're starting to very quickly make our way towards that 2002 low. And then eventually there on after, right, we're going to start to really seek out that 83 cents, €1, essentially buying 83 cents US. So unprecedented times, right? Price action is being smashed here. Euro USD pushing super hard towards the downside. And this is all about opportunity. This is all about, is this a sustained move? Are we going to see this pullback and are we going to see a continuation to the downside? Personally, I cannot see how the dollar can maintain this momentum to the top side. The dollar is way too strong for the data that we're seeing, right? And remember, all of the data that we see, right, specifically even referring to, let's say, the GDP data that we're going to get on the dollar for, like I said, Q2 for this year, we are talking about old data, right? GDP for quarter on quarter Q2, right here behind me, we're looking at data that ended in the second quarter of this year, meaning data that ended in June. Now, will that fully reflect, what is happening with the dollar? I don't think so. But at the moment, as I said, the Fed is driving a car forward whilst looking through the rearview mirror. They're making economic policy decisions based on old data. And so that's an extremely tricky and hard things to do. And I take my hat off to them. I'm not doubting them. I'm just saying, I don't know how the dollar can maintain the strength towards the top side. So again, I have that pessimism in terms of this dollar strength that we're seeing. But again, it's all going to be about price action, what opportunities present themselves, and how we can deal with this moving forward. Now, quickly having a look at USD. Again, as we were discussing last week, we were really looking for that ideal buy zone. We touched on it very quickly last week in terms of that 61.8 pullback. However, that pullback happened on the same day we discussed it. And I really would have liked to have taken USD ZAR along with every single person, and specifically even better than that in a live session, but we didn't get that opportunity. Again, as we discussed last week, we're sitting in this market structure, and when we received that 75 basis point interest rate move, I explained to everybody that on USD ZAR, we were pushing up into resistance, and should we break that barrier, which we then ended up breaking on the 23rd, USD ZAR has massively spiked. So Friday, USD ZAR spiked. We basically ran from 1762 to 1804 to where we currently sit. So USD ZAR is looking extremely vulnerable, extremely weak. We've broken that 78.6. Right, looking at this from a daily time frame, we have smashed that 78.6 to the top side. And guys, I think we are going to see that 19, if not even 20 Rand to the dollar before the end of the year, right? 19 is within our sights. We're not too far off the $19 Rand to the dollar mark. Again, if you're just dealing with the South African Rand, what does this mean? Ultimately, everything that we import becomes more expensive. Exports are great for the country because it's cheap to buy from us, but everything that we bring in, all the technology we bring in, becomes more expensive. And in addition to that, for those of you who have South African Rands, in relation to the rest of the world, we are getting poorer by only having South African Rand. So not going to affect if you're not dealing or looking at the rest of the world. If we're living just in your little bubble right here in South Africa, it makes no immediate impact to you. It's going to be a longer term impact in terms of the price of things, but it's definitely something we do want to pay a little bit more attention to. Now, looking at Euro GBP, just to show you the amount of volatility that we've seen pretty much since Friday afternoon, Friday evening, Euro GBP is on a roller coaster here, right? And there is no price action to support where this roller coaster is going. If you have a look at the spike towards the top side, the spike has literally pulled all the way back down. So those gains that the euro made, right, in the last 8 hours or 12 hours has been completely wiped out, right? Pound looks like it is starting to essentially gain a bit of strength back, right, in relation to the rest of the countries. So what we want to start to then look at and start to consider is who's going to survive, who's going to come out on the other end of this in a better position than the rest. At the moment, the data is saying that the dollar is the winner at this moment. But again, I'm doubtful of if that is going to be the case. Now, quickly having a look at commodities, because we're going to jump into indices. We're going to trade that live this afternoon together. Having a look at where gold is currently sitting. And gold, again, like I said, I was not looking for any sort of short positions on gold, because again, in economic uncertainty, gold acts as a safe haven, right? We look at gold as, one of those foolproof type asset classes that when the rest of the world is in chaos, best thing you can do is hold gold or hold diamonds or silver, a commodity of such nature. Now, gold is currently sitting still in a free fall from what we saw last week, right? This is the interest rate announcement that we saw last week. And this move over here showed me that potentially, if anything, gold will have sanity, and we could look for market stabilizers like gold to give us the first indication of what is to come. The fact that gold pushed up in value and held support last week gave me a lot of hope. We could see a weakening dollar and opportunity there, but we didn't see that. We saw that market structure completely fall to pieces. Brent, same story. Good market structure. Keep an eye on Brent for a buy. I do think we could start to see some buying momentum coming up very, very soon on Brent. And I think we've actually just already broken that price action. So I was looking at price action on Brent like that, and we've just popped through that $84.30 a barrel. So you definitely want to watch Brent here for a potential long position. But again, we are here together to obviously have a look at what is happening for the indices this afternoon. Again, markets are looking crazy, and we obviously want to approach the markets with as much caution as humanly possible. So as always, I'm going to set up my charts really quickly to prepare for those moves. And what we want to do, as always, is I'm simply isolating, which charts that I want to see. And specifically, that's going to be US 30, NASDAQ, as well as German 30, all sitting within a 1 minute time frame is what I'm busy looking at. So I'm going to go ahead and arrange my charts. And I remember, again, we could see a ton of volatility this afternoon. So please trade with caution. I can already see massive volatility in this market, and we've just opened up on the opening bell. So let me quickly share my screen really quickly. And this is what we're currently seeing on the open bell, right? We have US 30 on the left-hand side, otherwise known as Dow Jones, NASDAQ in the center, all German 30 on the right. And these markets certainly are giving us that first candle, looking for that rally, looking for that spike. US 30, right, is failing to get above that resistance. I would like us to essentially break this level on US 30. I know it's a little bit small for those of you who are watching. I'll open it up a little bit bigger. So I'd like US 30 to break that level, but we do need to remember, we have a little bit of certainty here that we are in a little bit of a bull impulse. I'd like US 30 to break that. US 100 needs to sustain a move above that level. And again, German 30, same story. We would like to break that previous high that German 30 has just made. So again, we're just looking for those signs. We're looking for those movements. And as soon as we get them, that's where we're going to start to have a look at how do we get in these positions. And so what I'm going to do here on US 30 is I'm going to look for, I'm still a bit cautious, for the only reason being that we did see on Friday, and I think it was Thursday if I'm not mistaken, we saw that initial push past structure, past where we want to be, and then we saw, markets reject and obviously go absolutely crazy, absolutely sideways. So I would like US 30 just to clear, and specifically German 30, just to clear the highs of the day. If we can clear out those highs, sorry, not of the day, of the afternoon, once we get those highs cleared, I'm happy to consider a long on US 30, purely then because of the fact that we've cleared out those markets, we've gone through resistance, and we're clearly seeing participants towards the top side. NASDAQ definitely doing its thing. I just want German 30 to follow suit and then see US 30 pop to the top side, and then I'll get into it. NASDAQ has also been known to sometimes move out prematurely, but I am seeing US 30 or specifically German 30 do its pop. So what I want to do here is, again, with these weird movements, I simply want to just go and put my structure, my stop loss under market structure, and I want to allow this market to do what it wants to do here. So we are going to be looking again still at a 1 minute time frame, and all I want to do here is I just want to make sure from a risk management perspective that my stop loss is as neat as it can be because of these sort of volatile times that we're in. So again, what I want to just do here is I'm just double checking my 4 hour. And once you place a trade, right, it is sometimes super important just to go back and just look at the biggest picture and make sure you have not missed anything, information maybe you didn't consider, or something that you might have been an oversight. So in this case, I'm not seeing anything that's really missed here. Only thing that I'm seeing that I don't like from a buy perspective is this diagonal that we're seeing right here, right? So we're in a bear market, we've broken support. We now are attempting to retest what was once support, now resistance. So again, on a bigger time frame, for a long-term buy, for those of you who are looking at US 30, I do believe there's an investment position available. And essentially what we want to look out on US 30 for, I'm going to go into a 4 hour time frame, right? If there's going to be any sort of recovery, then I want us to look at this, right? I want you to look at that absolute low, right, that we made. I'll give you the exact date. So I want you to look at the absolute low of the 17th of June 2022, right? That low happened on a 4 hour time frame at 5 o'clock candle, which actually represents 4 in the day, right? The 17th of June, I want you just to mark that off. And ultimately, I want to see if price can pop out through that level. Because again, that would mean two things. A, we're breaking through this diagonal resistance for a buy potential opportunity. And B, we're breaking through those massive lows that we saw. Now remember, these are the 6-month lows. So when we talk about the worst 6 months in stock market history, I believe in the last 20 years, or worst performing 6 months, but we're talking literally about January to June. That June low was the worst 6 months in the stock market. So we want to obviously understand, can we break that low, which is now resistance? So can we break above that low, right? I think that's going to signal potentially one of the biggest moves we can potentially take advantage of this afternoon. Now guys, let me know what it is you are busy looking at. I don't know if you guys are looking at some of the other markets and other positions. So let's just hear what your thoughts are and what it is that you're busy looking at. Richard, all the way from KZN, what is happening? Sunda, welcome, watching from Eastern Cape. Does crude affect Brent? Great question, Aslam. So does crude affect Brent? What we need to understand is that Brent is essentially a closer item that is mostly produced by WTI, which is Western Texas Industries, right? And there is a correlation, right? So when we see that one is in oversupply, that can also then affect the ability to import the other. So even though there isn't a direct correlation, we do see knock-on effects in terms of, where they're being produced and what are the supplies of such. The different types of commodities will also go into different processing systems, right? As an example, Brent and crude are used for different applications. Some are used for fuel, some are used for refining certain types of oil-based items. So that is where you could see some sort of correlation. But yes, I generally prefer to, on my side of the world, I generally prefer to watch Brent over everything else, because generally that is the international price that we would see, barrels of Brent being traded for. And so that's what I peg a lot of my assessments on. But in terms of looking at one and the impact on the other, it's a very similar thing to having a look at the price of silver and the price of gold. Similar type of commodity class. And you can see correlation in some cases, but again, it's a demand supply type perspective that we obviously need to take into account. Aslam, in terms of what's the expectation for US 30 for today, in essence, I'm looking for, and ideally looking for, a long-term pop out for a buy on US 30. So again, let's just jump into the charts and I'll share my screen in terms of what's busy happening. But ultimately, I'm looking for that pop out to essentially break those 17th of June lows, right? If we don't, right, then guys, we are in some crazy times for indices, right? Then we really need to start considering riding these sell markets, these bear markets to the downside. Again, the biggest giveaway here, that if we do not break that mark for today, if we don't break that 17th of June low, right, that I pointed out over here, then, you know, we're in for some honestly crazy times because we have this diagonal we need to get through. Let's quickly have a look at the other markets together. So tech is performing, right? US 100 performing as it should. German 30 performing as it should. We could just be seeing a delay on US 30. I don't like seeing when two markets have popped off and US 30 doesn't follow. We generally don't see that, right? In most of the cases, we generally see these markets follow each other, or at least all confirm together, unless there's a component of US 30 that an individual company within the US 30 portfolio that is not part of the NASDAQ, that is just crumbling under pressure, right? And that could be anything related to Russia, Ukraine, you name it. There's going to be a whole bunch of new things we have to consider when looking at the markets. But I'm going to hold it nevertheless, again, for the reason being that if we have a look at where US 30 currently is, right? If we hold a potential breakout towards the top side as a buy, and that does not work out, which it very might not, right? We're seeing that pullback as we speak right now. If we remember, the first trade is always a feeler trade, right? So people sometimes ask me, you know, why don't I enter multiple, you know, trades, 3, 4, 5 positions at a time? Well, the reality is the first trade is always a feeler trade, right? We see a market moving. I like to get in a trade, and once I've covered that position, and once I've banked, or at least in theory banked some pips. What do I mean in theory by banking some pips? So when my stop loss is in profit, I take that profit and open up additional trades because I'm not adding risk to my portfolio. But by placing a feeler trade, you can keep that risk profile down to a single number, right? If you have a $10,000 account and you only want to risk 2%, let's say, of your account, you know, you're only essentially looking at risking about $200. I think I said $10,000 account. So if you have a $10,000 account, you only want to risk 2%, you only want a $200 stop loss as an example. So that is where you would essentially place one trade, have your $200 feeler trade as a stop loss. And the second that moves into profit, the second you've got some pips available, or you've made some money, $100, $200, $300, I then would use that $100, $200, $300 to open up additional positions. So then I'm not opening positions in relation to my equity or my account. I'm opening up positions in relation to the profit that I have banked. Okay, so from my side, I would like to just hold out US 30 over the course of today. We're seeing good reversals on NASDAQ, good reversals on German 30. And again, the market had a really bad day if we look at the close of markets for Friday. So German 30 attempting to punch through, has punched through, potentially pulling back for that retest, which is fine. We do have that bear move pretty much from about 12 o'clock this afternoon. So that bull move from 12 o'clock this afternoon, right? That gives me a bit of hope. The only thing I don't necessarily want to see here is, you know, are we sort of making a little bit of a triple top, or the potential signs of a triple top on German 30? And something we're just going to have to obviously watch out and pay attention to. But in the general, we are moving in the right direction over here. So that's, you know, where we want to be seeing things. The key is catching that pop out towards the top side. In this particular case, I don't think US 30 is going to work for us as a buy for today. That pullback that's happening might last, but ultimately, again, that is why, you know, I would prefer to look for that 100% break above that 17th of June low. So I think what I'm going to more than likely end up doing is we're going to maybe have a look at this one on a 5-minute. And if we get a pullback here, right, what we're starting to see the symmetrical movement here, right, is this is indecision. And more than likely, we're going to move, if you guys have seen indecision in the past, indecision essentially moves towards the apex, right? Markets move and play with each other until we get to that point of the apex. When we hit that apex, generally that's the point at which we see markets make a decision. So I expect US30 to pull back up. I expect it to range slightly to the right, and then I expect the decision to be made. Again, the key area for me here is exactly where we pretty much have been bouncing, right? You can see it on a closer time frame. These areas here, right, where we've been bouncing, this is a 1 minute time frame, is where I'm looking for an investment type position long term on US30. Again, if we start to get that break to the downside, let's have a look at the 1 minute time frame. Will give us an indication. Okay, so this is great. Okay, so for those of you who want an early indicator, if we're going to go long on US30, right? For me, my stop loss is set, and I want to be out of something quickly. If I want to be wrong, if I'm going to be wrong, I want to be wrong quickly. That's me. That's my trading style. Some people don't like that. They want a huge trailing, they want a huge stop loss. They want to hold a swing. I don't like trading like that, specifically around New York Stock Exchange, my personal preference. But what I would be watching for a long on US30, right, is look at your RSI on a 1 minute time frame, and we're simply looking to break this market structure towards the top side. We could linger. Again, I've told you guys the 500 period SMA generally acts as a dynamic support / resistance, and we can see that, right? 500 SMA has held up markets, being a good place of bounce, and we're getting to that point right now. We are at that 500 SMA. So if this is our next level of support, we could then see US30 reacting off this level and then ultimately moving topside. However, should we break this level, I think there is more on NASDAQ to lose and German 30 for a longer sell position, right? Why? Because if US30 is leading the way and it breaks this level, it's very, very likely we could see NASDAQ as well as German 30 follow. And they have a lot more to lose from a market's perspective than US30, because they're just further up in the sky, right? So that's essentially what I want to wait for. But I do want to hold on a couple more minutes, right? I don't want to finish this live session right now. I would like to see where this market wants to go. Being a Monday, specifically, we've always, in most cases, had really good trading Mondays. And that will generally set the tone for the week, provided it's caught at the right time. So on a little bit of a stretch. Yeah, that's a little bit of a stretch. Okay, so what we want to look out for, potentially what you can also look out for on your side, on German 30 is the same story on the RSI. We're just looking and mapping out this little bit of a market structure. We can see it's rising. That's great. No issues there. But again, we're looking, if we get that break to the downside, that would be a trigger for me to sell. And I should have seen this prior to the New York Stock Exchange open, right? I should have seen that structure there, but I didn't. That ultimately there, that breakout and retest could still indicate German 30 wants to go long. And so again, we could still very well be long on US 30. As I said, consolidation in a symmetrical triangle shape generally means markets are trying to make a decision. Again, I don't like to be in a range. People ask me, when they ask about where markets are going to go, and I say, well, in the next couple of minutes, it's going to do this, and then that's going to happen. Ask, why don't I get into those trades? Because when you understand market structure and price action, it starts to become like reading a language. When markets move, to most people, it's like chaos. But when you spend enough time in the market, you can actually read what they're saying, and certain formations tell you what state the market's in, where it may potentially go. People ask, well, but if you can see that, why don't you trade that? Well, the reality is that I look for certain things to trade. I'm not looking to trade a range. I'm not looking to trade 1 minute candles, each candle moving 200 pips, opening, closing, opening, closing. I'm looking for breakouts. I'm looking for a trade I can place, move my stop loss into profit, and then go and live my life, right? Scalping, great every once in a while, no issues there. But again, I'm looking for those breakouts. For me on US 30, we're seeing it still. I still think there's a potential to pop out towards the top side. And again, we want to wait for this RSI break. We might get it. Let's see. And let's hold out on this one. But I do think, A, if we can pop out here, and B, if we go past that 100 mark, we could see a good recovery on indices across the board. We should see NASDAQ as well, German 30 following suit. There we go. But again, the key test here is, are we going to follow, really break out of this level? That is what I'm most interested in USD. So I'll hold it out and maybe take some of you guys comments and questions. Tobias, I see price action is king. Absolutely and always. Price action dominates and determines everything about the markets. Price action is where it's at. Nolu Zwane, welcome. Fabian Aslam is expecting for 30. Yes, something big is yet to come, guys. Darius, you can see it. Big news tomorrow, guys. Be careful with lot sizes. Akil is saying be careful lot sizes. Yeah, guys, I think everything we do in the markets right now, again, we're going to see opportunity unlike anything else that's out there. But again, markets are not in state that we've seen in the past, right? We're seeing things happen in unprecedented ways. And so, yes, there's going to be opportunities and you could catch a move that is just an absolute monster. But again, at these times, you want to preserve the longevity of your account. You want to last through a season. And so it's far better to take a little bit more caution, observe, be a part of that market, put in some feeler trades, be a part of it, play it, and to go all in. And you're in for a day, and then you call it a scam and that's it, right? That's not what it's about. It's about a long-term plan and or strategy. Okay, so let's keep it on US30. Again, we're gonna still move in the symmetrical triangle formation. As you guys can see, like I'd love to see a breakout now, and I would love to see a breakout now for selfish reasons that it's always great to catch a breakout in a live session. For those of you who have been trading for a while, you know how difficult it is to A, catch a breakout, but B, time that breakout. And I think that is obviously one of the complexities of doing a live broadcast is, you know, A, timing the breakout, B, catching it successfully, and C, trading whilst broadcasting, right? Trading on its own is quite a challenge. But if you imagine, you know, this view that we're giving you guys is ultimately for you to see what happens in the background, right? A lot of people ask me what happens behind the desk. You know, what have you got? There's buttons, there's things below the desk, there's controllers everywhere. And so that adds the complexity of looking at the market. The moment I'm looking at you and the market's over there, right? That market could be moving and I'm none the wiser. So yeah, it is a challenge, but it is fun. We love what we do, and that's what it is all about. Okay, so questions, guys. As I would say, I'd love to see a break to the top. Guys, if a break happens, man, if US30 goes for a topside move, I'm in it, right? If we see, and just please, right, I'm saying this now, please make sure you are aware of this. And if tomorrow, right, we're in a massive long on US30, don't be caught sleeping behind the steering wheel, right? Set up some alerts. Actually, let's go ahead and do that together. I don't want you guys to miss out, right? So this is completely up to you. Again, it's based on your account, your profile. This is educational for educational purposes only. So again, it is up to you. It's up to your account. You must decide what works best for you and what you can afford and cannot afford to do. But for those of you who don't want to miss the breakout, this is what I would suggest, right? A, if your systems are on 24/7, right? So if your desktop is on and you can hear it at home, you have a trading setup such as this is what I would suggest, right? Go ahead and just set up a couple alerts north of that level. So specifically on US30, again, if you're trading with another broker and you're watching us live right here, right now, A, I don't know what you're doing, right? There's only one place to be, but C, your prices will be different, right? So when I read out these prices, you're going to see some crazy numbers, right? I don't think Aslam is on 24 hours. Yeah. So in essence, we want to put in some alerts, but ultimately, for those of you who want to link up your phone, ultimately, you want to go ahead and I'm going to show you how to do this, right? So if you want to create an alert, and we just need to watch out for this US30 pop, that I'm not still speaking and then it ends up moving. Let's just create some alerts right there. Okay, I'm going to do this before I let myself down. And this market moves and I'm sitting here speaking about things that I should be making money on. Right, So I'm just creating some alerts. I'm creating some levels here, and I'll watch it if it does move out. Right. For those of you who want to link up your phone, right, I want you to go ahead and do this, right? If you go into your MetaTrader MT4, right, and you want to get notifications, you want to set up penny orders, you want to make sure that your PC and your phone are talking to each other from a notifications perspective, right? What you can go ahead and do, right, is go to your terminal, right? Click on tools, then click on options, and you get this option box, right? And you're going to see a bunch of information. You're going to see a MetaQuotes ID, you're going to see a bunch of different things, but ultimately what you want to do is you want to take that MetaQuotes ID, right, and you want to copy that. You get a number, right, whatever the number may be. Okay, you want to then go onto your phone, onto your MT4, and what you want to do on that is you want to literally go into your settings, right, of your MT4. Okay, and when it comes to your MetaQuote ID, right, you want to take that MetaQuote ID that you're seeing here, right, and you want to put it into your terminal, right? And this way, notifications, when you get them, essentially allow push notifications on this side, and you want to make sure that these two numbers match. When I say these two numbers match, I mean what? That the one that sits here on your phone, right, when you open up the settings, they're going to give you an ID. You go ahead and you put that into your desktop. So what does that mean? It means that when a level is hit and your PC is on, you'll get a notification on your phone, because that is probably one of the hardest things about mobile trading is I'll set all these alerts, I'll set these things. Let's say I go to the kitchen, right? I hear ding in the background. I don't know where it is. I don't know what it's about. This will send that alert to your phone so that you see on your MetaTrader that, listen, alert, this level's been broken. So just so those of you who want to do that and set that up, if you have a desktop solution, that's the way to go. Load shedding doesn't make it any easier. Just bear in mind, if your PC turns off, it will not send you that notification. You just need to be aware of that. You need the desktop application open and running to forward through to your phones. Now, in addition to that, let me just quickly speak about this, because it is something that has come up quite frequently, and it is something we need to discuss. For those of you who have heard the news, or just potentially looking around at the world, you can obviously see what's busy happening. Right, the Apple App Store has essentially removed MetaTrader MT4 and MT5 from the store. Now, the general story reads that in essence, why they've done that is that there is ties, or essentially that MetaQuotes itself is essentially owned by a Russian entity, and that there is essentially money being moved through MetaQuotes to get that money out of Russia. So Apple in the US, as part of its sanctions, has gone ahead and removed MT4 for both desktop as well as mobile devices. Now, for those of you who are asking yourself, well, what's next? Could that come to Android? Could that come to any other platform? Guys, we are working on a solution as we speak. As always, you need to understand and remember, Globex currently is the longest, essentially longest established broker, licensed and regulated in Southern Africa, right? We've seen these trends happen overseas. We've seen, all the worst things happen, and we're constantly developing and making sure from a risk perspective that we're covered in all events. So what we are busy doing is building out a temporary solution as well as a permanent one. So please do not be worried when you see news like that and wonder. We do have you covered, and we'll make some announcements in the coming days based on the information we have received. Now remember, this is quite fresh. This happened over the weekend. We are investigating. As far as we understand, we are currently not at risk at this particular moment in time, and neither are you. So that's just a side note for those of you who've obviously asked this question and just want a little bit of feedback. Now, really quickly, guys, in terms of US30, we might be seeing that pop through. I did get a quick hit in terms of that resistance level, but what I would suggest before one of my cameras do decide it is going to retire for the day is go ahead and have a look. We are obviously moving into that zone where, oh, camera is gone. Camera, say goodbye. we're gonna have to stick in this view for now. And the good thing about this view is you can technically see the charts through my green screen, which is a pretty cool trick, right? But it's gonna have to do for now. What you need to pay attention to here is, again, we're in that symmetrical triangle formation and we're looking for a break towards the top side or to the downside. This would generally just be the market structure I would look at. We are in a range. And again, I'm glad I'm not in a buy or sell here, because this is what drives traders mad, right? Is where you buy high, markets pull down, you sell low, markets pull back up, you get to break even, you close your sell, it pulls back down. So for those of you who've traded a range before, you know the challenges that exist there. And obviously you want to avoid getting stuck in some sort of crazy range that you can't get out of. But it definitely seems like NASDAQ, German 30, they know what's going on. And, I think potentially NASDAQ is doing really well. I think out of all three, NASDAQ is doing really well. So if any of you guys saw NASDAQ and you caught that move, massive well done. Again, I prefer US 30 just from a pip count perspective. The gearing is great, the pip counts are big. And so that's just my preferred instrument. But again, completely up to you in terms of what you have obviously looked at. Is there a head and shoulders pattern on the RSI 5-minute chart for US 30? Let's quickly give it a look. So Fabian, are you referring to that as well as that? I don't really try and apply bigger price action structures on the RSI, mostly for the reason that if we have a look at something like Head and Shoulders, right, you'll see that in the past there could have been 30, 40, 50 Head and Shoulders, right? And that's just the nature of how an RSI moves. So I try not to look for sort of price action in the RSI like that. I'm more looking for channels and break-in structure. That's kind of where I find the RSI to be the most useful, and I think it's probably one of the most underappreciated parts about the RSI is those moves. So guys, I'll continue. I'll hold on with you guys, just bearing in mind that my one camera has decided to say temporarily goodbye. But I think let's do this, right? For those of you who have time, I'm going to wait for this thing to break. I'm going to wait for this thing to give us an indication of where it's going, because I want to trade it. I really, really want to trade it, and I'd really love to catch along. Again, if a long is not in it and this thing's going to break down, so I want to catch that too. Something is going to happen regardless. Remember, we don't see the trajectory that we're looking for at 3:30 on NYSE open. We sometimes see that happen at 4. There's currently 4, so I want to have a look at that and see what ends up coming of that. So do me a favor, right? We're going to take let's say a 3-minute break, a 3-minute recession. If you'd like to stick around for me, I'm going to wait it out. If it takes another 15 minutes, 20 minutes, I'm going to get a fresh camera in that fresh battery in that one particular camera. And then I'm going to wait. I'm going to wait for this thing to break out. So stick around with me for, 3 minutes. I'm going to essentially just do a quick swap, have something to drink, and then we're going to be back together. And ultimately, we're going to watch this thing move. Okay, beautiful. So again, Mackenzie's saying US30 is ranging hard. Yes, right. Indecision galore on US30. I'll quickly share my screen. So I do get excited when I see this kind of indecision, right? It means that markets are at a T-junction, right? Specifically US30 as we speak right now is indecisive over, are we going long? Are we going short? What is the next move? And when I say